Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps. Lots of small caps in play right now. They're going down the line and they're picking select individual stocks to run, so it pays to be on the right plays. And so every day we're trying to find the best plays. And today one of the top gainers was SSLJ. Closed up 61%. It was up much more earlier in the day. Fasto RSI above oversold levels. Nice bold cross here. It was good follow through. This had the big bounce on Friday. It did form a bullish one white soldier reversal pattern on Friday. It's trying to confirm that pattern. It hasn't quite been confirmed yet. A spinning top formed today. It closed just about where it opened. The whole key right now is to stay above that middle Bollinger Band at 214. Above 214 signals upside potential. Below 214 would signal downside risk. It needs to stay above EMAs 4 and 8. If it were to drop below 145, that would be a major red flag. It did come up here and it filled the gap. It hit the top of the gap up here. That's the bottom of this candle at $3, and it pulled back. Anytime you fill a gap and you fill the break above, that is a lock and gain signal. To the upside, the top of the gap and the 50-day simple moving average at 326 are the two levels to break. Okay, check out ABIO. This turned into a good play. Good job, Andy, in our chat, alerting this early in the morning. We had some nice follow through. Posted a chart on this when it was at much lower levels. It was breaking above this sideways action here, and what we were looking for today was a close above this closing price on the 23rd of May, and it actually broke well above that, and then it also got above the March 14th close, and then it closed just right up here at this February close right here, the red line at about 81 cents or so. And so on this chart, there's a gap between low of day on this candle and high of day on this candle. And so right now it's working on filling the gap. You want to see the share price stay above the bottom of the gap level, which is at 75 cents. A drop below 75 cents would be a red flag. That'd be a sell signal. The bottom line is if it holds EMA 4 here at 68, the chart's super strong. It just could consolidate if it pulls back below 75. It needs to turn that level into support and then also turn this 80 level into support as well. If both of those levels hold, the next key target will be the 200-day simple moving average at 97. That'll be the next big level to break if it can get above this 90 open right here. And you can see there's a lot of room to run here with this big gap on the chart. Okay, take a look at CRMD. Okay, so this had really nice follow through. It's been a really good run for CRMD. You know, it's getting pretty frothy here with RSI up here at 89. You know, this is a historically high level for this stock. If you draw a trend line across the top of where it's at right now, you can see it's very rare for it to get to this level. Check out Plus DI over here, how vertical that is. That's an unsustainable move. I mean, just look at the candles here. Anybody that saw Bitcoin run to 20,000 and it formed that Eiffel Tower pattern, that's the type of candlestick pattern that this has right now. It's unsustainable. What's going on right now is it's hitting the September or October high close here at 75 cents. It hit that level and it pulled back. It's going to need to break above that level to head higher. Below 75 is going to signal possible consolidation. There's an unfilled gap down here between high of day on Friday and low of day today. And so a drop down here to EMA 4 at 53 cents would fill the gap. You know, right now this candle formed well above the upper Bollinger Band, and many times when that happens, the candles do work back into the bands. It did break above February, December, November, all these key resistance levels here, and so it was a huge move for this stock. It just it just needs to be able to keep pushing higher, which seems there's not much gas in the tank with Fasto and RSI at overbought levels, and this candle forming well above the upper Bollinger Band. So to keep going further, it needs to break above 75, which it could do. And if it does break above 75, then the next key level to break is going to be this gold line here. This is the weekly chart for CRMD, and that'll be the 100-week moving average at 91. If it hits that 91 level and it fails to break and stalls out, That could be the temporary top level. What you're looking for this week is a close above this high close here back in October of 2017. You want to see that level turn into support to signal it wants to head higher. The risk is this gap between high of week last week and low of week this week could fill, and so if it stalls out, it could drop down here to 50 and fill the gap. It could still have a bullish chart, but just consolidate before pushing higher. The unfilled gap is a red flag. Okay, let's look at MYND. Closed up 33% today. Now it's above 50 on RSI. Fasto's above oversold levels. You got a bull cross here on AWX. Everything looks great except for this right here. It had the big pullback from high of day. Look at that long upper wick. If I come over here and draw some, put in the accumulation distribution indicator and shaken money flow, what you're going to see is a spike down on these indicators, and that's going to reflect the dilution that happened today. So notice the giant spike down on accumulation distribution, shaken money flow spike down as well. This happens, you know, these indicators will spike down when you have a big pullback from high of day like this. So you can see the high of day and then it pulled back. Even though the stock closed up 33% on the day on a huge volume spike, accumulation and shaken money flow both spiked down. That's a major red flag. That signals dilution. They were dumping shares into the rally, all that kind of stuff. That's what penny stocks do. Okay, so enough of that. Going forward, what really counts is this middle Bollinger Band at 168. If that level holds, it could push higher. It has to break above this key resistance zone. You have the 50 and 100-day simple moving averages both converging at the 206, 207 level. Above 207 would signal upside potential. Fail to break this level and drop below 168 would signal downside risk. There is a gap between high of day on Friday and low of day today. You could see a drop down to 140 to fill that gap if it failed to hold that 168 support level. Okay, let's look at GST here. All right, so first I want to show you the GST daily chart. And so yeah, this did close up 30% today. Yeah, this had the big drop. It was you know, nice follow through today. You know, this did form the bullish one white soldier reversal pattern as well. And then it looks like it confirmed that pattern today with this white candle. I did not post that up here, but let's see here. This is the bullish one white soldier. That's the same pattern here, and that formed on Friday. You have the white candle here above the red candle, and then yeah. Bottom line is that it's all about EMA4 here at 15.3. If it can hold that pink line, then it could head higher, but it has to break above the bottom of the gap. Notice how these two wicks are hitting this red line here. The bottom of the gap is always a tough resistance level to break. Once it does, look for a run up to EMA8 and a gap fill. You know, if it does fill the gap, then you have a second gap up here, and that's right up at EMA13 at 286. So there's a lot of work for GST to do. You know, if it dropped below 15, that would be a sell signal. Above 18 there would signal more upside potential. Okay, so let's look at GST here on the 15-minute chart, and you can see the gap is over here. It's been hitting the bottom of the gap resistance level. It's hit that multiple times, and then now it pulled back, and now it's testing that 50 simple moving average at 16. If it drops below 16, that would be a major red flag. It could drop down to 13 there and test the 100 simple moving average. If it can get above 18, that's what we're looking for here. Candles forming above that level, then it could fill the gap and run up to the 200 simple moving average at 22. So it's going to be, you know, but below 16 signals downside risk. Above 18 signals upside potential. So AMDA, okay, so it did end up closing up 11%. This is one I put out an alert on, you know, on in last night's video, showing how it had closed here above EMA4, and that was a signal that it was heating up, and how PSAR here, you have the green dots above the candles. They were setting up for a PSAR bull flip once 51 got hit. That did happen today. You can see the dots did flip below the candles. I also was saying, you know, keep an eye out for this volume here, and you know, look for a volume spike and a breakthrough EMA8 resistance. And today volume did come in, huge volume spike. There was only like 70,000 shares that traded on Friday, so this is a big increase. And then it broke above EMA8 there at 49, and so that's the key level to hold. Now what you want to see is a break above EMA13 at 53. If it can get above that level, the bottom of the gap and the middle Bollinger Band at 60 will be the next targets. There's a gap here between high of day on the 12th and low of day on the 11th. Okay, so yeah, so that was cool to see it heat up. It's just about following the charts and then, just having patience and waiting for the right time to strike. Okay, so take a look at AWX here. That was brutal. Closed down 40%. If you caught the last night's video, I did say that that it was going to be a nasty, nasty drop once it happened. And today the pain came out. I hope nobody got caught holding the bag on this one. It did run up here at 20. I mean, I was seeing that it hit 26, but I guess they're calling 20 as the high here for today. Regardless, it was brutal with that gap up open. That was a nasty job they did there of just really pushing this thing and then driving it up. If you were able to unload and you've been riding the whole time, that was beautiful. Congrats to you. And now there's this big pullback here. What happened with this red candle is it confirmed the bear's 3 gaps ups reversal pattern that I explained had formed. There was 1 gap, 2 gap, 3 gaps, and then that closed well above the upper Bollinger Band. It was all signaling the chart was really frothy. Today that red candle confirmed in a big way that pattern. Notice the volume was much lighter today than the previous days. Many times you'll see a bigger volume spike on the down day, so that's interesting. What's going on now is, in my opinion, it's all about this EMA 4 right now at 642. If it can get back above EMA 4, it could get the bullish movement going again. There's no unfilled gap on this chart, so that's the positive. It's not like it needs to come back here and fill any spaces here. The downside risk is that it could come down here to EMA 8. If it does drop down to EMA 8 at 524, look for a technical bounce off that level. If that fails to hold, then you have EMA 13 at 439. Those are the 2 big levels below. If it gets back above 642 and EMA 4, then it could get moving again. You never know with these kind of pump and dumps if they're going to pump it again or if it's just toast. So we'll have to watch. If you look here at the weekly chart for AWX, it's hitting a key support level right now. If you look back here in 2014, it had broke above the high close from 2014 in this area from over here in 2013, basically around 575 or so where this red line's at. And so right now it's coming down to that level. I think what's important on this chart right now is this EMA 4 at 568. You might get a technical bounce off of that level. If it broke below the 568, that would be a major red flag, and you could see EMA 8 at 445 tested. Keep in mind that the weekly chart does not set until the closing bell on Friday. Look at the big volume last week. I mean, that was a historic amount of volume for the stock. This was big volume this week for the stock, but it's a drop off from last week. It was just Monday. I mean, there's more trading left, and we'll just have to see if this is going to be toast or if it's going to keep moving. From what I gathered, this was running on no news. I'm not sure why this had the crazy run that it did, and I wasn't finding the news easily. This is the gap up open today. When that red candle formed, that was a signal of downside risk. It got below the 50 simple moving average and below the 100 simple moving average, and so it's going to have to get above both those levels. Once it gets back above that middle Bollinger Band in the 50 simple moving average at 858, then it can get moving again above 870. But if those levels remain resistance, you could see a drop down here to the 200 simple moving average at 447. That's the next support level on the 15-minute chart. Okay, keep an eye on ISR. Closed up nearly 12% today. This has got an uptrend going on the daily chart. It closed above the middle Bollinger Band on Friday or Thursday after testing the 300, 450-day simple moving averages. It bounced off that. You can see here all the moving averages are lined up here, all the big ones. And so as long as it stays above 52, that's going to be bullish. Right now it needs to stay above that middle Bollinger Band at 58. If it holds that, what you're looking for is a break above 68 zone, which is the closing price here on the 10th. If it can get above that 68 zone, get above 72.50 here, it could get moving. If you could see here, there's not a lot of candles in this zone, and it could maybe make a run up to $1. So keep an eye on it. It has to, stay above that middle Bollinger Band to keep the good times going and break through that 68 resistance zone. Take a look at SALM. Thinly traded stock did close up 20% today. Had a PSAR bull flip. The green dots are below the candles. You can see it bounced off of key support here, the 50 and 200-day simple moving averages. It closed today above all the moving averages. This black line is the 400-day moving average. If it can stay above that at 540, look for a possible run up to $6. This closing price on the 9th is the key level to break. It needs to stay above $5 to remain in play. If it dropped below, that would be a sell signal. Okay, take a look at HZN here. This is a cyclical play. There's been a lot of move into a lot of sector rotation right now out of tech stocks and into cyclicals and value plays and beaten up stocks. And so right now we've got HZN here bouncing. Keep an eye on it tomorrow. If it gets above that 50-day simple moving average at 637, the next target will be the 100-day simple moving average at 711. That level failed to break when it was tested back in June, so that will be the sell zone if it gets tested and it fails to close above. If it did close above, that would continue the run. Okay, keep an eye on CHFS. Closed up, 2.5% today. This chart's heating up. It caught our attention last week on this candle right here when it got above the middle Bollinger Band on this big volume spike, and then it had the volume on the 23rd. It looks like people loaded down here. If it can stay above the middle Bollinger Band at 163, that's the dotted purple line, a new uptrend could begin. It finally closed above that level today. That was the first close. It closed at that level here, but you really have to go off this chart. You got to go back here in May to find the last time that you had a nice solid close above that middle Bollinger Band. So that's a bullish change in trend. It could possibly get moving here. It's got to break out of the current trading range, which is basically between around 147 or so here, and then the high close. I always go by the high close in the top of the white candle. If it can get above this 185 level, then that should be the signal that it wants to push higher. So it's got to get above the closing price on the 9th. And so it's wound up tight here. It's right in the middle of this channel. A breakout above this level would put the 50-day simple moving average at 227 on deck. Keep an eye on DRRX. They had some good news today. It closed up 10%. It had the gap up open up here at 160, and then they pulled it back. Good volume. There's a nice volume spike. It closed today above a bunch of major moving averages. It wasn't looking good over the weekend on this close down here below the 400-day simple moving average. Today it closed below all these lines here, which are all moving averages, which is really good. It only has the 50 and 100-day simple moving average above to break. What needs to happen now is the middle Bollinger Band at 156 needs to turn into support. If that level holds, a new uptrend could begin. If you look back here in May, it closed above the middle Bollinger Band and formed a black candle similar to today. That took a little while to get going. That level held and ended up cruising higher. Not a huge winner there, but it did cruise higher. The trade here, if it can get you want to draw on your trend lines, it's going to be all about breaking above this 170 resistance zone. If it can get through here, it's back in this channel, and so it's going to be about break. It's lined up here basically 169 with that upper Bollinger Band. If it can break through the upper Bollinger Band at 169, the 50-day simple moving average at 180 will be the next target. Okay, and then finally, let's look at NAKD. Okay, very light volume right now. It did close up 15%. This is one of those ones just to keep an eye on. Look how they walked this thing down on no volume. It had the big volume spike. This is what we call the front load on the 12th. People loaded here that knew that there was something coming to give it a catalyst for this big pop right here. And so you had the load, and then people unloaded, but there was less shares on the unload than the load there. So it looks like some people are still holding since this big move. But you can see how they just faded this thing and just have walked it right down. That's just the algorithm is just set not to let it break above the moving averages. And so what needs to happen is it has to break above EMA 8. Today it closed above EMA 4, the pink line, and that's what we were looking for. That's the first step on these kind of bounce plays, because look how 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. It was 18 candles ago was the last time that there was a close above EMA 4. And so, if for 18 candles in a row, they did not allow that level to break. Many times when they let that level break, that's your signal. Okay, they changed the program. Now they might start buying. Notice this is a full Marubozu candle. There's no Marubozu candle. There's no wick, upper or lower wick. The first trade of day was low of day. The last trade of day was high of day. Extreme bullishness. I mean, it's very, very, very light volume. So what we're looking for now is a volume spike and a push through EMA 8. That would be the next key level at what is that? I can't even read my own thing there. 419, and then the EMA 13 at 438. If it can get above that 438 level in EMA 13, it could get moving and head up to that middle Bollinger Band at 491. After this big pullback, it might get moving. The reason why it looked like a nice play or potential for a play, even though it has no volume, it needs the volume to be a good play, is that it's hitting the green line there, and that's the 50-day simple moving average at 357. If that level holds, this is the level that it should get a technical bounce off. Now that is the stop loss level. If it broke below 357 and was going to close below that level, then that would be a sell signal. There's a huge gap on the chart between low of day on this candle and high of day on this candle, and that is the risk on this chart, is that it's been coming down and filling the gap, you know, and so a drop way down here to these moving averages would fill the gap. Okay, so yeah, so keep an eye on this one for technical bounce. All right, thanks for viewing this video. I hope you're learning from, you know, just trying to share the information and help everybody. Please come check out the chat. I'll post the link after the video.